the trade boom in Australia, quite clearly experienced in May, might already be tapering off. And that's because the price of oil has fallen, though it hasn't yet affected the price of coal. One thing that has eased a little with worries about a global recession is the Australian dollar. But our dollar, I've got to tell you, is quite unusual because under normal circumstances, the big interest rate rises from the Reserve Bank and the record trade surpluses would be boosting our currency. But right now, exactly the opposite is happening. So let's bring in here the man we talk to when we talk currencies, and that's Sean Callow, who is Westpac's Senior Currency Strategist. Sean, many thanks for your time.
Good to be with you, Ross.
Okay, so I mentioned there that the Australian dollar is doing almost the opposite of what you would normally expect it to do under these circumstances. Big rate rises from the Reserve Bank, record trade surpluses.
Right. So I think it's particularly striking that you would have the Aussie under pressure when the trade position is so good. It really is historically extremely strong. We've got an all-time record high monthly trade surplus in May, and the big picture has been of surpluses for about 3 or 4 years. So that's a very strong part. But obviously on the interest rate side, the Reserve Bank was very slow to get started in terms of the rate hikes. And clearly, while it's raising rates by 50 basis point increments, the Federal Reserve is raising 75 basis points. So in terms of how attractive the Aussie dollar is to international investors, it's still not overly appealing.
Okay, so then there's a point right now, as I see it, though, is that we're worried about global recession. Now, that doesn't play well for Australia, especially on the commodity side. And really, though May is at a record level, it's what's happening now and into the future, the expectations. It's probably driving the Australian dollar as much as anything else.
Yeah, so look, really what seems to be very clear is that the market doesn't believe that China's economy is going to revive from this COVID slowdown in the first half of the year. So our base case is that there will be a pickup in growth led by infrastructure, but you're mentioning there's some differences in terms of the commodity price story. You've got that immense strength in energy prices, which is obviously in large part due to the Russian invasion of Ukraine. That's going to last for quite some time. But in the meantime, metals prices, which are more linked to a lot of business activity, they actually fell by about 25% in the second quarter. So there's weakness there. And that's really an indication that the market's not on board a big revival in China's economy. And so when that's the case, then even though Australia's domestic economy is travelling pretty well and we're printing these trade surpluses, the Aussie dollar still comes under pressure.
Okay, so we should also make the observation that the real pressure is against the US dollar. When we look at, say, the euro, if we look at the Japanese yen for sure, even the British pound, the Australian dollar has probably gained in recent times, and that is all about the commodity story. So, you know, the yen in particular has come under historic lows as compared with the US dollar. So really, if you like, trade around the world is being affected by the movement of the US dollar right now.
Yes, the US dollar has been very strong this year. Obviously, as we've been saying, the Fed is being very aggressive in its rate hikes. The US economy, for the most part, has been strong, but also this very nasty mix that we've all been talking about, fears of stagflation, of high inflation and slow growth, even recession. That's undermined the equity markets, and that's spilled over to the Aussie too, that investors have become quite pessimistic. So the Aussie overall holding up okay with that commodity price support, but in Japan, they're still printing money. They've got extremely low interest rates. They're committed to that. And for the euro and sterling, they've got the incredible reliance on imported energy. And obviously the war is is a European war, really, and Australia's economy isn't getting hit nearly as hard from that.
So, OK, Sean, what's the outlook then? Because, you know, you're always good for a forecast as to where the Aussie dollar you think might be headed to, especially against the US dollar. Where is it going? And especially this is important because people are now starting to trade, starting to travel a bit more.
Yes, that's right. We saw a real pickup in tourism in the May trade numbers there. And so certainly the Aussie near term does look weak against the US dollar. We think that while we've got that focus on the Fed, another big rate hike coming up later this month. So long as that's hanging over the Aussie dollar, then I think that we could fall to about 66.5 cents. We are more optimistic further down the track later this year. As I said earlier, we do think China's economy will help. Is being underestimated in terms of recovery there, so that should help the Aussie. And as we're showing there with that trade support, that should see the Aussie back to sort of 73, 74 cents maybe by about the fourth quarter.
It's going to be interesting. It's all about the interest rates and all about the rest of it. Just one last one, Sean, for you, and that is clearly the trade story is partly all about where we go to in regards to the currency in the future. And Australia has one of the most highly traded currencies in the world. So from that point of view, it's one of those things where these two things, people can't mistake that they are interlinked, that there's two forces right now. One is that trade and one is the commodities, and the second one is interest rates. And it's the speed with which those interest rates move that will determine the future direction and even the pace of the Australian dollar.
Yeah, it's just been made a very difficult job for us trying to forecast currencies, is that we've had commodity prices so high and interest rates so low. Historically, that's not the case. For everyone who remembers the late 1980s, high commodity prices, high interest rates, high Aussie dollar. But recently, with those elevated commodity prices and record low interest rates that have only just started to be raised in the past few months, it's a very difficult situation. Left the Aussie lower for the time being, but we do see that upside longer term.
Yeah, Sean Callow, Westpac Senior Currency Strategist. As always, great to have in the program, and many thanks for your time.